Welcome back to the morning show here on Arise News. The African Continental Free Trade Agreement is expected to encourage inter-African trade, currently at 17% of all African exports, by eliminating complex and disjointed trade agreements across the region and creating a massive market that eliminates 90% of tariffs. Proponents also hope it will encourage outside investment by creating an easy entry into a larger single seamless market for goods and services. 52 of the 55 countries that make up the African Union have signed the agreement. However, Nigeria is yet to sign the deal. President Buhari on Wednesday stated why. He said, and I quote, "I don't think Nigeria has the capacity to effectively supervise and to ensure that our colleagues in the African Union don't allow their countries to be used to dump goods on us, with the detriment of our young industries and our capacity to utilize foreign exchange for imported goods." Joining us now to speak on this is economist and former senior technical advisor to the Minister of Industry, Trade and Investment, Tilewa Adebajo. Tilewa, good morning.
Good morning, sir.
Welcome to the morning show.
Good morning, Ruben.
Good morning, sir. It's great to have you on the morning show.
How are you?
Great,
very much.
Thank you.
Well, we've been on this African Continental Free Trade Agreement since. Now, the excuse that, the last-minute excuse that the Nigerian government gave was that the Manufacturers Association of Nigeria was kicking, chambers of commerce were opposed to our going to Kigali last year, and that civil society groups were also opposed to it. So we were told there will be consultation. Since May last year, we seem to still be consulting. And this particular agreement will be inaugurated, will be kicked off on July 7 in Niamey. Now, why is it taking us so long to consult? Or what the president said, do we take that as a clear indication that we're not going to be part of this free trade agreement? And if we don't sign it, what are the implications?
Thank you very much. I think you've raised some very interesting issues. What was quite shocking for me was that this agreement had actually been passed through the Federal Executive Council. It actually approved it.
Yes.
And it was just about implementation where it stopped. So the signals we're getting actually is not very positive in the sense that this has actually become quite political. What are the consequences of not signing this agreement? First of all, I think if you permit me, let's go back into economic history. Economic history has always been about trade. From the era of the 400 BC, we had intra-African trade. Yeah. We had the great trans-Saharan trade route. And Time magazine recently said that the richest man that ever came across the planet was Mansa Musa, who currently valued to be worth about $500 billion today. And he controlled the gold trade all over the world, that most of the gold currencies being minted in Europe, even as far as Asia and in India, came from Africa. You take a look at the era which we've been trading on equal terms with the rest of the world, India, China, and the New World, and also Europe, for 300 years on equal basis. This was pre-colonial eras. And in that area, Africans sent emissaries to courts of Europe, in Portugal, in France, and in England. There were ambassadors all over the place. Post-colonialism, you found out the fact that even Nigeria itself as a country is a trade deal. The person who put together the trade deal that made up current Nigeria today, not too many people talk about him. His name is Tubman Goldie. He set up the deal. He increased the share capital of his company from about £100,000 then to just over £2 million to be able to fund the expedition that came to amalgamate Nigeria. And he brought in Lord Lugard, who we now know amalgamated Nigeria and turned that Nigeria into an export enclave. So we've moved over from that period of colonialism where we had export enclaves, where Europeans carved out their colonies to use to bring out their raw materials to fund the Industrial Revolution, and to be able to use those markets also as big markets for their finished goods. We came through the era of pre-independence, and in the 70s, you saw that these European countries and the world order started to change towards trade blocs. The European Union was created. Then the emergence of China. And, we've done something very successful in Africa, which is a successful trading region, which is ECOWAS. ECOWAS is a tremendous success. free movement of goods and services across West Africa. We have a West African gas pipeline infrastructure being built. And what we're saying about this continental free trade arrangement is that we have various trading blocks. We have SADC in South Africa. We have all the other ones in East Africa. And what we're saying is let's amalgamate this. The value of our market is about close to $2 trillion. The European Union, the value of their markets is close to 7 trillion. And the Asian markets, the value of those markets are close to 10 trillion. So, and what is even more sad about this is the fact that, as you said in your earlier introduction, only 17% of our exports is traded through the inter-Africa trade. Most of our exports are leaving Africa. In Asia, they're achieving 60% of their exports is within that continent. And in the European Union, 70% of the exports in the European Union is within the EU. So we need to be able to create these powerful trade blocks, because it is only by having these powerful trade blocks you can negotiate properly with the likes of the United States or even China.
But see, the point that the president was making and the fear that has been expressed by some stakeholders in Nigeria is that Nigeria will become a dumping ground for foreign goods. Particularly, you know that some of our neighbors have signed agreements either with the European Union or with the Chinese trade agreements. And if they bring in these goods, they can flood the Nigerian market. Is the Nigerian market so weak, so porous, that it can easily become a dumping ground? And does that justify, you know, negating, ignoring the advantages of keying into this regional integration and this vision of the United States of Africa by 2063, as expressed by the African Union?
Fine. Let's take a look at our internal issues, which we need to address. Our products in Nigeria is all over West Africa. Most of this trade is not regulated or is not formalized. But you go as far as Senegal, you find Nigerian products being traded in Mali, in Burkina Faso. There's a flourishing trade of Nigerian manufactured goods out there. Dangote is in about 18 African countries in various areas doing manufacturing of cement and also exporting. So there's an active trade of Nigerian products. Our petrochemical industry, unfortunately, is very weak. So we're not able to process refined products, which is a key comparative advantage that we have, and export it to all the other African countries and build pipelines. So we have significant structural defects within our economy that might not put us on a competitive footing. But that does not change or does not stop us from taking the leadership, just as we did in setting up ECOWAS, to be able to set up, to be able to take the leadership in this African Continental Agreement. So all those sort of fears that we have about dumping, we should be able to address that if you're taking the lead. But if you do not have a seat on the table, how do you begin to address these issues? You know, so for me, that is really where the issue is. Nigeria claims to be the largest economy in Africa. If the largest economy in Africa is not driving a trade agreement for the continent, then you leave the likes of Rwanda and the rest of the other progressive nations, Rwanda and Ethiopia. They're the two countries that have been driving these agreements.
Yeah.
So
Absolutely.
that is really where we have the problem. It's not really, we've not been taking the leadership role.
It is worrisome. It is starting to look like a bit of a two-edged sword. And another particular concern I have is how this is going to affect our general importation laws and tariffs, because we seem to have such high tariffs on products such as cars, for example, at 70%, or even CPO as well. So how can we see that affecting our importation and our tariffs?
Well, you see, it's important that you understand that one of the things we don't talk about in this country is the trade policy. And I think what is important is that if you're going to drive your economy, there are 4 pillars in which you have to drive your economy. We talk about monetary policy a lot, and we focus on the central bank and what the central bank is doing. We talk about fiscal policy, but the 2 other pillars that you need to focus on is your trade policy and investment policy.
There was a trade policy put in place under Minister Aganga.
Yes.
In charge of trade, investment, and industry at that time, if you recall.
There was the trade policy, but then there's a difference between policy and implementation. So, you know, you can put all the policies in place that you wish, but if you're not able to implement these policies to drive your objectives, then it's going to be detrimental. The issues I see is the fact that we cannot begin to be afraid of competition when you are supposed to be able to drive the process. So I think it's important that we need to look at this. I don't agree with that anyway in terms of dumping, because you need to strengthen your institutions. Let's talk about rice. Rice is supposed to be a banned item, but you go into any market in Nigeria, you'll find imported rice, selling cheaper than local rice. How did that rice get into Nigeria? Was it the fault of the foreign country next door that the rice came into your country? So enforcement is very important when you're going to go into these trade policies.
Well, the federal government, some of the spokespersons for the federal government, they say, well, government has never at any time used the word ban, that what they use is restriction of imports. And policies have been put in place in terms of access to forex to restrict those importations. So don't be surprised if we still find many of those goods in the markets.
Exactly.
But you talked about leadership.
Yes.
I would like you to dwell on that a little bit more, because both President Obasanjo and other commentators on this African Continental Free Trade Agreement, they draw attention to the fact that at a point in history, it was in fact Nigeria that was leading the process of regional integration.
Yes.
And now what was started with the Lagos Plan of Action, with Nigeria providing the leadership, now will come up on July 7, has been coming up in the last 1 year, either in Kigali or Addis Ababa, and now in Niamey on July 7. And Nigeria will just not be at the table. It seems that, the current leadership in Nigeria has dropped the ball.
Well, I have to agree with that in the sense that, whatever you have to say about President or former President Obasanjo, he's somebody who has believed in African integration and fought for apartheid, the disbandment of apartheid, and I think he has a vision in that kind of area. And he's able to push through a lot of his policies, and he takes the lead. And, the people who have put Nigerian foreign policy backing up with the economics, they have been able to use economy and foreign policy as a tool for African regional integration. And I think they've succeeded with what they've done with ECOWAS. So I think for me, it's unfortunate that the so-called giant of Africa and the largest economy in Africa cannot take the leadership in driving these issues. So if we have any issues with any of these things, we should be at the table ensuring that all these things does not happen.
Absolutely, sir. Dr. Adebajo, we just need to go on a very quick break, sir, and as soon as we are back, the conversation will continue. Thank you. Welcome back to the morning show here on Horizon News. Economist and former senior technical advisor to the Ministry of Industry, Trade and Investment, Tilewa Adebajo, is still here in the studio with Dr. Ruben Abati and I discussing this free trade continental agreement, sir. Now, what economic effect do we feel signing this agreement would have on Nigeria if we were to sign it before the 7th of July in terms of our GDP and our GNP?
Okay, fine. I think you've hit on a very important point. I was just looking at the Economic Recovery Growth Plan over the weekend in preparation for this program. And all the indices and all the forecasts on that plan, the government is not going to meet it. Next year will be the end of that planning period. And the last 2 years, they were forecasting growth of 5% and 7% for next year. Clearly, that is not going to happen. Our economy is in need of some serious structural reform for us to be able to achieve growth. The president is talking about lifting 100 million people out of poverty. The reason why 100 million people are in poverty is because our GDP is not growing as fast as our economic growth. Economy is growing at 2%, population is growing at 3.5%. So if you cannot achieve economic growth of 7%, you're going to continue to put more Nigerians into poverty. So where do you think you need the structural reforms? You need to be able to access a larger markets. You need to bring investments into your economy. What is our comparative advantage? Oil and gas. In 1977, Nigeria was producing 2.5 million barrels of oil. That was a large amount. Today, we can't produce 2 million barrels. So that means that we haven't been making investments in a key sector of our economy that drives it. We've built a West African gas pipeline all the way to Ghana. Why can't we take that pipeline all the way to Senegal, or take it to Morocco, or take it all the way through Cameroon to other African countries? We need to begin to think big and begin to understand that the markets go beyond Nigeria. When you start to sign these agreements and you begin to look at investments outside the continent, then you can begin to increase your foreign direct investments. FDI in 2012 was $8.5 billion. Today is under $2 billion. So where is the revenue that is going to stimulate the growth? So now, more than ever, we need access to other African markets and a structural reform to be able to achieve the sort of incentives or the stimulus that will grow our economy. Because right now, even the government's plan cannot work. So it's important that we rejig this and be able to use this Continental Agreement as an opportunity to be able to drive the entrepreneurial potential of Nigerians to begin to access and move into other markets. There are many traders in the Aba area and even a lot of traders in Lagos that are trading along the west coast of Africa, along the eastern border of Africa already. So it's important to formalize this trade and begin to think big because that is the only way we're going to rescue our economy. So that is why this is also important, because it gives us an opportunity to broaden our outlook and expand our economies.
Should the government consider subsidizing production in order for us to boost this, or do you not think that's a good idea?
You don't really need to subsidize production. You really need to just provide incentives.
So wouldn't this be a good time for the Ministry of Trade and Investment then to kind of incentivize refining and processing of agricultural goods?
Definitely, but those incentives are already there, Leila. If you take a look at the incentives for investments in this country, they're one of the best in the world. But what is also important is that you need to be able to balance this. You see, it's not just about the investment policies. Our investment incentives are probably one of the best in the world. You know, we have pioneer status in terms of tax breaks. But the export grants, for instance, have not been paid.
But what are these incentives? Because those are the ones we know. Tax breaks are a huge one that we usually speak about. But let's break down these incentives so that we actually know.
Fine. If you're coming to as an investor into Nigeria for the first time, the NIPC has what you call a one-stop shop. Now, within that one-stop shop, all your permits you need, you can obtain them quite easily there. And basically, your company registration, everything that you need. You have your certificate of capital importation. Once you have that, whatever money you make, you can take back out. There are no issues there. So you can bring in your currency in and out. So all the things that you need are there. But it's not just the investment incentives. What about the trade policy? Is it aligning with the investment policy? Does it align with your fiscal policy? Does it align with your monetary policy? Now, if you have sort of your business environment, we're beginning to develop a reputation of a non-friendly business environment. Despite the efforts of the government that they've done a lot of work from the Vice President's office on the ease of doing business. They've done a lot of good work in that area. But the way we treat certain companies or the way we're aggressive about certain things, you begin to drive out people. Funding, we're out of the JP Morgan Bond Index.
Well, let me ask you this. Which Solutions,
Yes.
recently released this country risk report for the, rest of 2019 for Nigeria. And some of the points you have made, they are out there: unfriendly business environment, low expectation of oil production, population time bomb, and rising inflation, 11.4%. They listed all of that. Now, they then made a point that Nigeria's economic growth will be struggling for the next 10 years. That the latest time we can expect any kind of improvement, significant, going back to, what we had, say, about 10 years ago, will be about 10 years to come. Now, what can we do? Either in terms of providing incentives for local investors, you've talked about incentives for foreigners. We can add to that access to visa, the visa regime for investors. So what can we do to fast track the process so that Nigeria does not stay at this level for the next 10 years? In fact, the way some papers cast the headline, they said Nigeria will not recover from Buhari's mismanagement of the economy until 10 years' time. But I didn't want to put it like that.
Well, I think you have to understand the issues. And I think that the reason why they say that is that if you're going to do something, people study your policies. And the policy you've put forward is the Economic Recovery Growth Plan. And clearly, if that is what you want to do or you want to continue to do, it's not going to work. So based on the sort of strategy you have and the policies you have, if you continue along this line, this is going to be the effect. I think we can all see that, and that is beginning to manifest. So what we need to do is that we need to reform. We need structural reforms.
Yeah, that report says they don't expect any major structural reform
that is really,
under the Buhari government.
That is where the problem is. If you're ready to do those structural reforms, then you will stimulate the growth that is necessary. And I think it's also important that we shouldn't forget what you call local direct investments. Okay, when I was in trade and investment, I was tracking about 50 companies on local direct investments. And what we did with those was that we focused on signing MOUs with those companies and made sure they had expansion plans. And we got close to about $5 billion worth of new investments. Because what is important, first of all, is that the people who are here, you need to encourage them to expand their businesses. And that is really the low-hanging fruit. So if the people who are here and the Nigerians do not have the confidence to be able to expand their businesses, then we're going to run into trouble. So we need those structural reforms to be able to grow the economy, which includes signing on to this Continental
I am
agreement.
glad you touched on local investment, sir.
Thank you, Tilewa.
Thank you, sir.
We'll invite you again. This has been very engaging.
It has.
We will have loved to go on and on.
Honestly, I have so many more questions for you, sir, but hopefully...